Welcome to panel 5, the first on the second day or the third day of our highly fascinating GLIC conference. I hope you had enough to eat and to drink yesterday in the evening, but I also hope that you do not believe that the Bavarians drink beer in these small glasses. 1 liter is the standard. Yesterday we had really exciting panels about the view of the entrepreneurs to our topic, and we have about education and non-financial assistance. But today we have to talk about money, about financial assistance. I would like to come back to a remark of John Freisinger yesterday, and he said that the key success factors for our business are talents, community, and capital. This reminds me of the theory of Richard Florida about the creative class. Talents, technology, and tolerance are the key factors after this. In my opinion, our job as an agency is to bring together 3 things: people, ideas, and capital. And as it was already mentioned yesterday, no money, no entrepreneurs. So I learned as a boy that it's not really gentlemanlike to talk about money, but I think it's a necessity. And not only to talk about the availability of money, but also to talk about the way how money finds its way from the to the entrepreneurs in the seed phases and in the phases of growth. So please let me now introduce the moderator and key speaker of today, this panel. It's Professor Christoph Zott, who was as a student in Germany, in Karlsruhe, today the Karlsruhe Institute of Technology. Then he was in Grenoble and British Columbia, and nowadays he is a professor at the IESE in Madrid, with a branch in Munich, hopefully, very soon. And he is professor at the Navarra University. His core activities is the creation of new businesses. And he has no space background. That was the reason why we asked him to join us. And I admire your courage to jump in this space arena, and then I welcome you here, and thank you very much for coming. The floor is yours.
Thank you. Thank you very much. So I can ask the stupid questions, right? Good morning, everybody. How are you doing? Good? Wonderful. Wonderful to see so many smiling faces. The theme of this conference is how to go from government programs to entrepreneurial actions. And so what we are doing this morning in this context is we try to explore the role of financing for how to achieve this. And I'd like to seed the discussion with a few reflections which are based on my experience, and Dr. Gruppe has already mentioned that. This is kind of my background. I have an industrial engineering background, so I'm an engineer, probably like most of you. And then after consulting for a few years, I did my PhD on entrepreneurship and finance. So, I'm squarely rooted in this topic, which I represent in my teaching as well as in my research. And so, some reflection will come from that background. The 2 main points I will share with you this morning, I will make in my opening statements, are the following. The first one is that financing early stage ventures is very different from project finance, let's say, in established companies, right? It's very, very different for a number of reasons, but essentially the nature of financing entrepreneurial activity is that financing is a process, and it's a negotiated process, and it involves a big dose of business building. So financiers are not just giving money, but they're kind of they're partners in crime, if you wish, with entrepreneurs. So that's the first point. The second point is that financing in and of itself is important. But it follows design. Financing follows strategy. If you don't have a good strategy, if you don't have a good business plan, business project, you will not get the finance. Okay? So it's not the starting point, but it is a function of business kind of design. Yeah. How many of you are entrepreneurs? 1, 2, 3, 4, 5, 6. How many of you want to be entrepreneurs? Another 6, 12. That's great. You know, if you all create kind of companies like Google, we'll be in good shape. That's fantastic. Those of you who are entrepreneurs, you know what I'm talking about, you know, in this picture, what I'm referring to here, right? This is the big gap at the beginning, the big perceived gap, you know, this financing gap, right? But there's an answer to this. And the answer will be kind of different according to where you are in the business building. So I thought that what I would do in my first 10 minutes of this morning's talk is to first of all give you an overview over private equity finance and what it really is, what's the nature of the beast. And then secondly, share with you a little case study from outside of the space industry, which really shows to you what the problem is for entrepreneurs. Okay? So let's talk first about the industry. And to understand a little bit the industry, let's look at the cash flow profile of new ventures. You will see this on the vertical axis, we have the cumulative cash flow. And it's very negative at first, right? And I deliberately didn't put a time point here where it crosses back on the axis, because this can be years out. This can be 5, 6, 7. In a space project can be much longer, okay? What is a very important vocabulary in entrepreneurship is the burn rate. How much money you'll need over a given period of time, let's say over a quarter or over a year. Okay? That explains the big gap that I showed at the beginning. Okay? If you're lucky, you will reach this point, which is the date of first positive cash flow, from which the curve turns. Right? But as you can see, new ventures typically have very high financing needs. Right? The maximum financing need is depicted in this picture, let's say after 5, 6, 7 years, you may reach the date of cash break even. Okay? So who is going to finance all of this? Well, it depends on where you are. In the very early seed startup phases, you don't have professional investors who come in here. It's basically personal savings and the 3 Fs. Friends, family, and fools, right? And then private individuals that have this very nice term. They're called angels, business angels, who invest their own private money in privately held firms, and among them sometimes are wealthy families. And then private equity, the organized private equity industry, comes in at the later stages, in fact. And this is what some of my research has also shown, not at the early stages, but at the later stages. They finance more likely the growth than the seed stage. And corporate venturing, public offerings are further down the road. Okay, so these are sources of equity funding. So what you can see already, and this doesn't even cover the government funding and other sources of finance, just the private equity part, there are plenty of sources, and if you are an entrepreneur, you will have to carefully think about where do I stand, in this life cycle, and whom can I approach, because at various stages, you cannot approach everybody. We make a differentiation between early and late stages, and there is one big difference, that the later stages, which are, for example, what we call expansion, growth finance, or management buyouts, management buy-ins, leverage buyouts, these involve debt. So they're leveraged, right? So this is where the banks can come in. But in the early stages, the first 2-3 years, banks don't play a role. You can go to banks, you can visit your banker, but I think this will be kind of a very humbling exercise because you will not get a very enthusiastic response. Banks are not in the business of financing young startups, okay? So these are not leveraged. So here you have to really look for equity finance, and that's why I thought I'd talk a little bit more about equity finance. Okay? So how does an organized private equity market look like? What is the nature of this market? In fact, what you have there is you have three players. You have the issuers, which are the entrepreneurs, those who issue private equity securities, who seek finance. In the middle, you have the intermediaries, and we're very lucky to have an intermediary here on the panel, what you call the venture capitalists. Okay? And then on the left-hand side, you've got investors, because the people in the middle, they invest other people's money, not their own money. So who are the investors? Well, first of all, as you see the flows of investment, sometimes investors directly invest in privately held firms. And so the picture is actually quite, quite rich, as you can see. In investors, corporate pension funds do invest in private equity funds, endowments, foundations, banks, wealthy families, insurance companies. They give their money to intermediaries, who then invest their money in different stages, early stages, later stages, and so on and so forth. Right? So this shows to you have to, if you want to raise finance, you really have to do your homework. You have to understand, who are the players. And in order to be able to obtain financing from those intermediaries, you also have to understand a little bit their pressures, because they have to show returns to the investors, right? Those who are on the left-hand side here. And they have to show these returns over a given time period, because the funds that they raise are typically only between 10 and 12 years, right? And that creates a lot of pressure for them also to exit, to invest, but then to exit after 5 to 7 years. That you have to keep in mind. If you take an investor on board, it'll be for between 5 and 7 years, and then they have to want to get out again. What do the venture investors actually do? Well, first of all, they have investment strategies, right? They have a contract, in fact, with those who give them the money about the industries in which they can invest. So not all of them will be able, for example, to invest in the space industry. If they have a contract which says we can only invest our money in software businesses, or in service businesses, or in biotech, let's say in biotechnology, you may have a harder time raising money for your space venture. So you have to be, you have to have a fundraising strategy, okay, that is compatible with the investment strategy of the investor. Okay? As a second step, these investors perform what is known as due diligence, because they know quite well that there's a lot of information that they don't possess. So they look at everything, not just your kind of technology, but they will look at the quality of the management team. They will look at the technology, property rights, and so on and so forth. And then they structure the deals. Okay? This is what we probably have in mind most when we talk about private equity or think about private equity. But then comes a very important kind of post-deal activity, which is monitoring. So they typically are very actively involved in their investee companies, on the boards, but sometimes also as interim managers, right? So this is what you also have to keep in mind when you take a VC on board. They are not kind of hands-off investors. They want to become very involved, and they really protect their investment. And the statistics show that like 50% of the founders get fired, right, by the venture capital investors. Managing and monitoring deals is important, but then also the exit stage that I talked about. They have to get out of those deals again, because they are under pressure to raise their next fund. And they can only raise their next fund if they can show returns to their investors. Okay? So managing the partnership, raising the next fund, and adding value to their investee companies are important kind of supporting activities. Okay? So what makes this distinct? Why do I say this is a distinct form of financing? Why is this different from corporate finance, let's say? Right? This is quoting from the EFCA, from an EFCA, European Venture Capital Association document, which is that private equity investing is in fact investing in the equity of privately held firms through a negotiated process. So it's constant negotiation. From the day you're trying to get a VC on board, long afterwards, it's always kind of negotiation, and these documents are not simple. They're like very, very elaborate documents. You need lawyers. There's lots of clauses involved and lots of renegotiation involved. That's number one. And number two is that venture capital can be described as a business of building businesses. So venture capitalists do not provide money. Right? In the ideal case, you want to look for a partner who can also provide context, expertise, strategic advice, and who can help you in building your business. Okay? So you need to think very, very carefully and very smart about who you get on board. Okay? So what I'm telling you here is that it's not just about finding finance, but it's about finding the right partners. Finding the right partners who can help you build your business. So you have to do due diligence on the investors, not just let them do due diligence on you. Okay? So that was that was the first point. Think about this as a partnership. Think about financing not just in terms of getting money, but establishing a long-term partnership which will help you successfully create and grow your company. Since this is a process, and since venture investors are actually very closely involved in the business building activity, what you will find is that they don't really like risk. Right? You may think of venture investors as people who take the risk, who share risk. Yeah, effectively they do, but they don't like it. They're actually quite risk averse. Okay? And so this is a slide I have from Advent International, which is a private equity firm, in which they outline all the things that can go wrong. So all the things that represent a risk to them. So many things can go wrong. And I'd like to talk about one, which is the business model. Okay? Because I think that's something that has become more and more important. Specifically, when we're talking about industries like the space industry, in which the basis of a new company is a technological innovation. Right? So you think I have a fantastic innovation, like a groundbreaking new idea, and so sure it will sell itself, and it's wrong. Right? Because you may not kind of have the right business model associated to kind of leverage this technology, and then it'll go south, as they say. Right? And I have an example here to share with you where this was the case, kind of, at the beginning, where the entrepreneurs at first chose the wrong sort of business model because they were kind of inspired by the wrong, what I say here, templates. Okay? So you have to find a business model for your innovation, and there are certain influences that influence your choice, and you see these influences on the kind of outer circle here, your goals, constraints, your stakeholders, and templates. And it's mostly these templates that lead you to make choices which are not very well thought through. Okay? Because you do things that you're familiar with. Okay? And to illustrate that point, and so this is kind of one of the traps of engineers of kind of innovative companies, that they don't think very carefully about the commercial aspects of which the business model is one. Let me highlight that by giving you this example of a technology company called Frixo. You probably have never heard of this company. It's an Israeli startup company that is they have invented a new technology to minimize friction. Right? And friction in metalworking is typically minimized by super polishing. And polishing is done by using hard material to polish the other hard material. They have invented a technology which is based on polymer lapping. So a soft material that can then kind of polish the harder material. A groundbreaking innovation, and it's so groundbreaking that it doesn't only double or triple the efficiency of the existing solutions, but it kind of improves existing solutions by over 150 times. So you have a performance enhancement of plus 15,000% through this technology. Right? So you'd think that, wow, this is kind of a pot of gold, and there will be no difficulty in commercializing this. And so this is what the entrepreneurs thought. The entrepreneurs, the founders, were people who were very familiar with mechanical engineering. And so, they were familiar with the world of machine manufacturing. So their initial kind of idea was, let's commercialize this technology by building machines that incorporate it. Okay. This was their business model. Had they stuck to this plan, they would not have found financing. Because building machines is very capital intensive. It's a lot of upfront investment. Plus, you're putting yourself in competition with other established players who are big, who are aggressive. And so you're putting yourself in very dangerous competitive territory. They did not understand all of those kind of commercial implications, so they said, no, we want to build machines. Until they talked to venture capitalists who kind of gently tried to convince them that this may not have been the best idea, or may not be the best idea. So they had to say goodbye to some of their kind of templates, to some of the ideas that they were familiar with, and they had to be educated as to what are the alternative ways of commercializing this technology. And the way they eventually kind of did it was they looked outside of their industry. Like you may want to look outside of the space industry for finding new input, new kind of ideas for how to commercialize the technological innovation. What they did was they looked at the semiconductors industry, which was structurally very similar to the industry which they had wanted to target, the automotive industry. Right? Friction reduction is a big problem in motors. Motors overheat. They need more fuel because of that. Okay? So they wanted to target the automotive industry. But with what kind of business model? They looked at the semiconductors industry and found a company there, Tessera Technologies, which was very interesting. The semiconductors industry has certain structural features which are very similar to the automotive industry and probably also very similar to the space industry, right? With very intensive capital expenditures, low profit margins, high barriers to entry, and very few companies with significant revenues. And then kind of if you look at at sales multiples, you have very low multiples, okay? But there was this one company in this industry that had incredibly high sales multiple. It had a sales multiple of 70, publicly traded company, Tessera. So how did they do this? And they looked at this company and said, wow, this is a technology-based company, but what they do is actually they have a very smart business model. They license their technology. They don't build products. In fact, they don't build products, they don't offer services, but they license their technology. Right? And then you look at the balance sheet, lots of numbers, but just kind of figuring out some highlights. You look at the gross margins of this company, not bad. Gross margins of over 80%. Okay? Net margins between 27 and 49%. It's very nice, Uli. Yeah? That's a company that we'd like to invest in. And the revenue growth is also absolutely phenomenal, kind of growing year on year very, very strongly. Right? So they said, wow, this is an interesting company. We need to understand their business model better. So they looked at this and they said, okay, let's apply some of the principles of business model design from this company to our company. Okay? It's R&D and intellectual property based. So we need to invest in intellectual property protection. That's what they did. Okay? Secondly, we will have to say goodbye to our idea of selling products, hardware. We don't do this. Okay? Also, let's not provide a service. Let's kind of focus on what we're good at, which is the IP, the intellectual property. And that's what they did. Okay? So they eventually adopted a licensing business model with high gross margin and low capex. Proof of feasibility, so they were in cooperation with industry players, and they kind of worked with GE and Ford, and so kind of slowly learned their way into this industry. Where are they today? What were the lessons learned? So this kind of business model design was a key issue for them to raise venture capital. They would have raised zero just on the basis of the technology alone had they stuck to their original plan to build machines. Way too expensive, and the chances of survival are very, very low. Okay? So coming up with this idea, or kind of adopting the idea of an IP-based business model, enabled them the financing. They also kind of transformed themselves into a chemical company because they found out that the effect, in fact, what made the technology work was a chemical effect. Now, the truth is that still today, more than 12 years after the inception of this company. It's still a very small company. They had revenues, but very trivial revenues, I would say, and they're still in the trial stage. So the market entry seems a big issue for them. They chose an industry which is very tough to enter, in fact, the automotive industry. Okay? So in terms of lessons learned for entrepreneurs, from this case, it's about the choice of the business model, this early choice of the business model, which is kind of very important and difficult to reverse later on. And then secondly, also the choice of your target market. Where are you going to enter? How long will it take you? Okay? These are important considerations, and it's not just about the technology. I told you technology is absolutely phenomenal, right? But if you make the wrong commercial choices, it'll make your life very difficult. Key points. Number one, venture financing is really kind of a negotiated process. Keep that in mind. Venture investors are more risk averse than you might think. They require risk management, which means that they typically, and this is what they say, they invest in good people, grade A people, and then they say the idea is not that important. But I'd say the idea is very important. Grade A people with grade A projects, and I say projects, not technology. So you have to think about the entire project as a business proposition. Financing follows the design. Early design choices like the business model target market are crucial prerequisites for receiving funding. And you have to have people in your team who are knowledgeable about this, who can help you with this. And maybe kind of get investors on board who also understand this and who help you with this. Okay? Why am I telling you all this? The entrepreneurs who showed their hands and the wannabe entrepreneurs, you should remember that always. It's an easy to remember acronym, CFIMITYM, right? What does that mean? Any guesses? CF, cash flow, is more important than your mother. Okay? So financing is important, and but all the other things that I talked about are very important in order to obtain the financing. Okay? Cash flow is more important than your mother. Cash is king. Okay, our panelists who will kind of help us kind of develop those themes, I'm very pleased to introduce you to them. Uli Fricke, who's representing the venture capital kind of perspective, who has been presiding the European Venture Capital Association, and so kind of giving us her perspective. Mr. Ginatti, Professor Ginatti, who is kind of giving us kind of his ideas and his vision from the European Space Agency perspective. Monsieur Godard, who is representing the corporate point of view, from Airbus Safran Launchers, Dr. Matsura from Japan, and again, kind of trying to share, wanted to share with us the Japanese and kind of Japanese point of view, the agency point of view, and last but not least, in alphabetical order, here Ms. Villain, who has a very deep knowledge of the aerospace industry, a very good overview. And so I'm very pleased to have this exquisite round, and thank you very much, Dr. Gruppe, for putting it together and for inviting me as well. So let's give them a round of applause. They will talk to us, for example, about these things, but maybe not kind of just focused on these questions, but these are the questions that we want to explore in more depth in the panel. The challenges in the financing of new ventures, how they propose to tackle these challenges, and what are the lessons that they have learned. Okay? So Uli.
It's really a pleasure to be here this morning. Good morning, everybody. What a wonderful initiative to talk in a structured way about how to take all of those great technology and innovation that happens in space for space industry and think about commercial activities around that. As a venture capitalist, we have looked into that segment now for 7 years and have seen many great ideas, some of them eventually also fundable. So I'd like to talk a little bit about what we have seen and experienced, but share some numbers first, because some of the challenges in funding businesses, no matter where they come from, also relate to availability of funding. So Dr. Gruppe this morning said, money is there, but not here. So there is lots of money in the financial markets and lots of liquidity-seeking opportunities, but the segments that look into innovative businesses with a certain focus might be actually comparably small. So in Europe, last year we had 4 billion euros overall invested in innovative businesses by institutionalized investor, venture capital firms, etc. Out of which only 25% go into very young companies. That's a small fraction of the money that is available, for example, in the US, where the market is almost 7 times bigger than the European. So in Europe, a company that looks for funding is actually very well advised to understand the environment, and Chris has laid out the environment to a certain degree. We have seen, however, very positively in the last years, the evolvement of other sources of funding that are available. So we, of course, have venture capital. We do have business angels, which is a very important source for early stage financing. We also see more and more interesting funding opportunities through crowdfunding and crowd investing, which for many businesses is an attractive complement to the activity of raising money from venture capital. When looking at raising money from different investors, it's not only important to understand those investors, as Chris has said, but also to really be able to talk to them in their language, to understand what they look for, and to make sure that your own perspective as an entrepreneur is matched with those investors. As a venture capitalist, actually I keep saying, venture capitalists are not your friends. Yes, we are risk averse, very much so, scared by many things, and we're also very impatient and always they're always wanting to have more information, more data. We take substantial shares of the business, and we're fairly aggressive in seeing a business plan towards completion. Yes, we're very supportive at the same time. We have broad networks that we bring to the table. And those of us that have specific funds geared towards investing in space-related activities, whether that would be downstream applications or whether that's the commercialization of space technologies outside of the space industry, we'd have, of course, a very thorough understanding of what we are looking at and the industries where these applications or technologies are being deployed to. So we can support businesses, but we are very active partners in your businesses. If you look at the newer emergence of crowdfunding, which, by the way, in Europe last year has been almost as big as venture capital already, 3 billion euros invested through crowdfunding platforms in innovative businesses. There, the money that you receive as an entrepreneur keeps you a much larger independence, is less dilutive, is not as supportive in regards to really understand your business model, understand the drivers, the success drivers behind your business, might not know potential customers, but creates a really substantial marketing buzz around your business undertaking, which always is helpful for any young company, no matter whether it's B2B or B2C. So it's really important where exactly the money is and what messages. Triangle, my company, we invest a venture capital fund that we have put together in collaboration with the European Space Agency. And we do look for companies that commercialize space technologies outside of the space industry. So we still have many, many, many people knocking on our door saying, we want to build a new satellite, or we want to do something that's being deployed in the International Space Station. As much as we love these kind of undertakings, we will not be able to look at those businesses seriously. So it's really important to look first and understand first what to look at. I think, bottom line, there is ample opportunity, and I'd like to encourage you. You'll hear from other panelists some very interesting thoughts how to raise money and how to get your business ready to raise money. I'd like to encourage you to spend lots of time in the beginning to think about what is necessary to get ready to talk to investors, get investment ready, and then start talking to those of us who have money to invest. Thank you.
Great. Thank you very much. So our plan is to have every panelist make an opening statement for about 5 minutes, and then we'll open the floor for interaction. Is that okay with you? Great. So, Pierre.
Thank you. I don't know if my microphone is working. Is it working? Yeah. So thank you. Uli said they are risk averse. I can tell you, representing the traditional industry and space industry, we are as well risk averse. And if I may, it's even worse because I'm a CFO in such an industry, and then when you want to invest some money, you have to come to me and explain me, and I explain you how difficult it is, and so on and so forth. So we are very conscious about this topic. We know that this is one of our weaknesses. We know in our industry we are very used to work with agencies, to work on R&D projects, but we are not very used to work with venture capital, and that's the reason why we are looking at that. That's the reason why we are currently studying it to see what can we do together, because we have in our company many, many engineers which have many, many ideas every day. And the difficulty for us is first to select. It's one of the difficulties to select the idea, and I will come in a second on this topic again. But as well to have a kind of vehicle and to learn from other companies like venture capitals, the speed, how do you make your decisions, time to market, which is not our strengths all the time. And we need to learn from each other. And that's the reason why we are studying that, and we don't want to be like dinosauria, you know, that have been very successful, and then after X centuries, you just die because you have not followed basically the market. So we study what happens in the US. We don't want to be clear not to copy the US market. That's not the purpose. But we want to be to put in high attention on what happens on the market, and part of it is venture capital. So now to come back on what is the difficulties for big group like what we have in this area. First is to select the projects. We have many projects which are oncoming, and the difficulties is to say which one will be the right one, you know. And usually in the past what we said is that we choose one, we put R&D in, and then we develop this one. And maybe it's a wrong approach, and that's what we learned from you, that we need maybe to start with many projects. And the consequence of it is on 90 projects from 100, it will be a failure, but then you will keep the last 10 ones, and then you make progress on the last 10 ones. And this is not the way which we have worked up to now. And that's one point that we need to focus on. The second point is, on the one hand side, to be ready to invest money, but as well to be ready to lose it. And I can tell you, as a CFO, it's a bit difficult in a group to say, okay, I invest money and I know there is 90% chances that it is gone. It's a tough statement for a CFO, and that brings me to my next point. In big corporation, you need to convince people. You need to tell them, yes, but it makes sense, and we have decision process which are rather heavy and long, and that's one of the points that we need to take into consideration from day one as well. So, in a nutshell, what we need to understand and what we need to learn is, for big groups like we are, is to go out of our comfort zone, to go in areas where we are not used to be, and to see what others are doing, not to copy, but to understand the way it works, and to convince the top management. If you don't convince the top management, it will not work, because you will have hundreds of reasons why it should not be different. And last but not least, in my view, we need to work most probably with different processes and in different areas and with different people, with a different mindset. So if we put such ideas, and that's the reason why we come back to joint venture, venture capital and so on, in our system with the same approach, mixed with other which have projects which will last the next 20 years, it will not work in my view. So we need to change a little bit as well this model. So these are the difficulties we are faced with. We know we have to change. We know this. We are very careful in the way to change it. So we have a cautious approach, but we are convinced that this is the path, and we will go through this path in one way or another. So that's for sure.
Great, thank you very much. So this was about how not to become a dinosaur. Now let's, from a corporate point of view, now let's hear this from the agency point of view, Dr. Mazura.
Director of New Enterprise Promotion Department of JAXA. So that today I provide you some information about financial support from JAXA for the venture business, not directly venture creation, referring to some limitation as around the agencies. So first, I show you the boring chart, which was describing the position within the Japan situation. So JAXA is under 4 ministries: Cabinet Office, MEXT, and MIC, and METI. Too many agencies, too many ministries for us. So, but important things I pointed out is that most of JAXA's budget comes from MEXT, Ministry of Education, Culture, Sports, Science and Technology. Not comes from the METI, Ministry of Economy, Trade and Industry, which this ministry has responsibility for promoting the industrial activity in Japan. And so we feel some difficulty to provide fund to business firms from JAXA. Even so, we focus on R&D activities. We have some industrial promotion activities. So this slide shows already Mr. Kawai described yesterday. JAXA had the spin-in and spin-off program, so-called JAXA Open Laboratory. This open laboratory is a public offering joint research program to attempt the establishment of new business. JAXA and business firms had a joint research contract using the space technologies. This open laboratory has 3 phases according to maturity of applicant technology readiness levels. JAXA provides cost for the joint research program based on the phase. For example, the JAXA paid the $30,000 per year for the feasibility study to the business firms. That is one of the activities. And then this is a spin-off example from the JAXA Open Lab. Cooling Best already described yesterday. So that right-hand side is a Megastar, which is a small size, very high performance mobile planetarium. This planetarium projects more than 22 million stars, and JAXA's rocket navigation technology used to improve the program performance. I show the other example is a so-called incubation program for satellite data utilization. JAXA will not fund the firms monetarily, but we will provide satellite data and analyzing programs. So it costs the $0.3 million per year to buy the satellite data and the programs. So we provide this data to the business firms to start a new business through the use of satellite data. Currently, 8 commercial companies joined this program in the field of energy, economy, education, and so on. And the next one, JAXA has already a program to provide opportunity to academia researchers, engineers to deploy small satellites for the purpose of human resource development and technology demonstration. Small satellites can be deployed from the 2 platforms. One is the H2A launch vehicle, the other is a Japanese experimental module on ISS, International Space Station. And then last year, we started to invite the business firms to deploy their satellites for compensation. For example, they want to deploy the 1U CubeSat from GEM. It costs $50,000. That's a marginal cost. That's a kind of support from the JAXA. I show the new activity of JAXA. JAXA has established Space Exploration Innovation Hub Center since this April, jointly with the university, agencies, and industrial companies. We accept many engineers and scientists participant in the Hub Center, including overseas researchers. As a technology for space exploration on the surface, on the moon, and the planet with gravity is very similar to advanced technology on the Earth. So we expect many participants from the non-space sector to this hub. JAXA cannot deliver the fund to the private sectors, but other agency, Japan Science and Technology Agency, so-called JST, provides a fund of the $0.8 million for universities, agencies, and industrial companies to develop something around the function to achieve the reach to the planet or moon. That's a new idea from Japan. And I saw the final chart. So governmental support for venture business. This is a scheme of support activity for small and medium enterprise to develop new businesses. Enterprise submit proposal using space technology to some agencies, so-called NEDO. If the proposal is accepted, NEDO provides a subsidiary of $150 or $1 million. In parallel, JAXA has a joint research agreement with the enterprise to provide the technology support, and so JAXA has some confirmation as R&D agency participate in the new businesses. So JAXA has some limitation to support venture business as R&D agencies, but we continue to try to establish a scheme to support venture creation. Thank you very much for your attention.
Thank you, Dr. Matsuo. You see lots of things happening in Japan, so everybody's kind of thinking about and actively engaging in activity, how to support entrepreneurial startup, through space technology and leveraging that technology. Rachel, would you mind sharing with us kind of your overview over the industry globally and kind of your insights next? Thank you.
First of all, I wanted to start with the challenge associated with private financing in space. I would say there is a double rationale. The difference basically in the challenge rely to the geography and to the capital intensity. Geography, there is nothing like the US. We know all that. You quoted the figure about private equity, venture capital. In the rest of the world, corporate or the sovereignty funds, they are not yet interested by space, and there is no space billionaire existing outside the US. Capital intensity, the big difference obviously is between funding a satellite system and funding the development of satellite services derived from the existing constellation or from a geostationary satellite. There is, of course, a large range of funding requirement of CapEx, capital expenditure, between $500 million for high-performance geosatellite doing communication services to several $1 billion for the LEO constellation, such as, for example, Iridium Next. Satellite services, of course, the price of an entry price is lower, but the profitability is lower too, because we are in a service business. We are not in an infrastructure business as we are when a satellite operator deploy a satellite constellation or a geostationary system. So what we have learned at Euroconsult for our 25-year experience in conducting about 100 due diligence for investors in both COMSAT and Earth observation, both individual geostationary satellite and both constellation. And what we have learned for the study we conducted past year for CNES about the concept of new space and how it could materialize in Europe, and what are the inhibitor factors for that in Europe. The lesson learned is that financing is project stopper number one for a greenfield satellite system when it is not a replacement capacity. Because obviously when it is a replacement capacity, you go with the cash flow that are produced, that the satellite which is being replaced. So this is the case either for the communication satellite and either for the Earth observation satellite. There may be cases where spectrum availability, spectrum right, is the first one limiting factor. We have seen, for example, a two-satellite system, geostationary, which has been funded by new investors in Asia called Protostar. Finally, they succeed to raise $500 million from scratch because it was a completely new system. But they didn't have the orbital slot and the spectrum associated to the orbital slot. And finally, they go into a litigation with the surrounder on the geostationary arc. And finally, the case was solved because the assets were sold, and one satellite was bought by two incumbents of the industry, Intelsat and SES. So I have listed here the different sources of financing applicable for financing a satellite system, a satellite constellation. The last one about crowdfunding is not so much relevant for this part of the business because obviously the volume of money is too small relatively to the requirement. But I have mentioned it because it's very much in fashion now for having the CubeSat and the nanosat demonstrator, and also for some private telescope to be financed with starting money from crowdfunding. So obviously corporate finance is an objective for having a diversification into new business that may be complementary or a substitute to the existing business of the company, and we have heard from Mr. Godard about that. Generally, this money is not coming from aerospace company, the only exception being SES, which has invested in O3b, which is a MEO constellation. The work we have conducted about a new space, private investment in space in the US is the lesson learned is that it's a unique combination with a specific recipe with 4 factors. The first one is the incentive by the government for private investment in space, meaning that the government by law is not doing competition with the private sector when the capability exists in the private sector to deliver the service to the government. We have seen that with the emergence of SpaceX, and we have seen that with a tool which is very effective, which is the Space Act Agreement to work with NASA. Obviously, venture capital and private equity. Obviously, the availability of strategic investors and the technology advantage. So we have seen emergence of a lot of new investors in the communication infrastructure. So you see here the different layer of investors. We see that the GAFA company, Google, Amazon, Facebook, and Apple, they are, for the time being, involved in low Earth orbit constellation, in balloon, and in UAV, because they need connectivity to address their market. In higher altitude, we see a continuous flow of new entrants as geostationary satellite operator, funded with export credit agency, meaning that the satellite vendors is funded, the commercial credit for the satellite vendors is guaranteed by the export credit agency of its country. There's not so many failed today on that. The only one is a recent one with the new sat company. And finally, about this emergence of private interest to fund a new space system, new capability. We have seen multiple names coming from different origin, mainly from the US. We have listed them by domain, and obviously most of the attention now is on the communication system, on the Earth observation constellation, but there is also initiative in other domains which are more specific, high technology, such as, for example, debris captures, and obviously science, which is the original domain of interest of a space agency, now being potentially an area of interest for the private investors. Thank you.
Wonderful. Thank you very much for this perspective. So a lot of stuff to be learned from the US, interesting initiatives going on. And now last but not least, Professor Ginatti, with his analysis of the state and his vision for the future.
Thank you very much. Good morning, everyone. I see the money is not very much interesting as audience number. I think is by 50% of yesterday panel. All the party was very nice yesterday. So allow me to share with you, you noticed I'm last minute was invited to speak about space and money, money and space. So what I would like to share with you is, where is the space that we are talking about that is worth investment in the short term, and where is the money that we can get? And I have the examples that we have learned in the last years. So I would like to start with UK. UK, among our all 22 member states, is a very commercial-minded organization or UK Space Agency and country. Look what they did. In 2014, they did analysis about the vision of the minister. The vision of the minister was, as you see, from 9 billion in 2010 to achieve a target of 40 billion in 2030. To have 10% of the global market. Now, where in the space they would like to achieve the money is the lower part. Today they have 1 billion from the global market, and they would like to achieve by 2030 3 billion. But they still have to achieve a 40 billion target according to the minister. So the rest has to be in the services and application. From 8 billion today they are running in UK, they would like to achieve 37 billion. So de facto, the real growth is in the downstream. And I would like also to share that UK have decided to set up ESA Center, which called European Center for Satellite Applications and Telecommunications. Very, very focused. I was one of the advisors to prepare the report at those times. The decision was very wise, and you know that UK is not investing nor in space station nor in Ariane. There are certain reasons behind. Not the system are not interesting. Fantastic scientific, fantastic access to space, but they are too expensive. And this is the problem where UK trying to build their own concepts. So this is to understand where the market is, that we would like to attract money. And why I love the statement of Uli, she said venture capitals are not your friends. And she's right and she's honest. So we are beautiful engineer, fantastic missions. We have zero idea about really market. And this is where we have tried in ESA to build up. And this is to tell you, attract investor attention It's very important because they want to make money. Simple, they want to make money. And we started to look at the different players who make money and want to create money. And I'll tell you, some of the creation of the incubating services was they look at the market. It was presented yesterday, and they quoted that this presentation is from one student by ISA. I'm happy to be against student. But this is to show you where the risk and where the money is. Let's focus on telecommunication. Upstream, 3.8 billion. Launching of those satellites, 2.7 billion. 11 billion, the sales of the capacity. Look at this number. Operator, I see here my friend Philip from SAS. I'll come back to that. Why? Because they make real money. They're really business people. So they use this 11 billion to make money. They grow. They are the biggest one. We are very happy Europe have a leadership on that. But look at the downstream. We are starting to look at the user terminal at 20 billion, factor 4 or 5 more than the upstream. And let's look at the services, and there's the real money. It's enormous by creating the combination of the integrated applications, as we call it in ESA, using also the capacity we developed with our astronaut at the space station, with telemedicine. This is the market we were looking for. And we went to the operators, EZOA. I went to EZOA in 2009 when we started the program and said, look guys, now look at two numbers, 2009, 2019. The red one was not existing at those times. Let's look, satellite will not be growth as the blue according to the green in 2019. They expected that the capacity lease will grow from blue to the green. Fast duplications of the capacity lease. And you see what's happened. We did study in 2013 in the middle way. The current situation is very simple. They are not even growth of 5%. So the all operators were suddenly thinking, hey, the forecast that we plan to grow in the market is not there, and they want to grow. And what we did in the discussion with all those organizations, the multis, they would like to address those markets. This market is not only forecasted to be duplicated in large scales, but also the facts analysis in 2013 that it's grown according to the forecast. And therefore, they are now working with us very closely in partnership to give capacity and certain conditions to the market to grow those user community. But this is to understand the space. Here, where is the money? The money needs to be in a seed, very little, very high risk. No one is interested to put money there. But when you're moving forward, when the institution take the risk of rolling that to the market in the development and rolling out, then our companies have a problem. And they have a problem because if they want to get money, the bank tells them you have a house. I told you yesterday, it's not easy. There we started to talk to investments, private investment. The point is that we have started to show them the analysis that I've showed you yesterday. This is facts. Fact of more than 300 activity, 168. And the problem is that those companies really were very much performing with institutional funding. When they're asking for market support, it was very difficult. So what we did, we started to talk to different organizations, showing them the profile of the revenue those companies are doing, and we started to talk to different companies who have needs with certain investors. And those investors are very limited on their objective, what they are going to invest. So we had to talk to many. So I have an example of more than 12 million that we received, or the company received, to roll out services. I'll go to the next. The next step was to talk to European investment banks. They asked us to help them for the Mediterranean region. So we're creating now a fund with Jordan, with King Abdullah, and European Investment Bank to roll services. And this is very attractive for our European industry to create partnerships. So the target in 3 years to put 25 companies in Jordan. Last week or 2 weeks ago, my team was there with European Investment Bank. They roll out all of these services in partnership. We have a 350 million market, almost like in Europe, to roll out. The next layer is to talk about the current activity. The process is they have no money. We are addressing partnership with local industries that start to support. Second, this is what we are doing today. We are negotiating today with a 100 million fund to have not to run behind 10, 20 different fund venture capitals, but we want to have one strategic partner or 2 or 3 who will take the whole portfolio and roll it out. I hope that you can soon announce this strategic partnership. We want really to have all our industry have the possibility to access to money whenever they need it. And ESA gives a rubber stamp for the industry, and ESA gives a rubber stamp for those venture capitals that we take the risk in the early stage. In total, European Investment Bank is very keen to build up, and we will roll it out further to Africa. And we would like, with operators which are very cooperative today, we are making many programs today, you may look on our website. And I would like to conclude with, we need to create in Europe something which exists in US, to have money which is easy to get for good idea. And this is what we want to get back from those companies. They are willing to give it to us, but we are not able to get it, ESA, to support new idea. Thank you very much.
Excellent. So thank you very much for these statements. Now it's the floor is yours, and you can ask questions. Who would like to ask the first question? Somebody has to break the ice. I see many hands going up now. That's great. Where was that question? Fantastic.
Good morning. My name is Rainer Horn from Space Tech Capital here in Munich. We're investing in companies, we're coaching them, we're also advising them. My question is going to the gentleman from Airbus. Last week, or the last weeks, you made big announcements about venture activity focusing on North American activities, or at least centered in North America. Would you be able to shed a little bit of light what the ambition behind it is? Is it wanting to be part of the new space phenomenon, wanting to gain innovation from the Silicon Valley? Or is it that one could also say, have you given up on Europe and you see the future in the Silicon Valley?
First, it's not only in the US, we have as well in Berlin activities there, but in both cases, basically, the idea of the group is to go outside of what the group is usually doing, to see what others are doing, and as I mentioned before, not to copy, because as we want to be world leader, basically we don't want to copy, because then you end up to be second if you copy. So therefore we want to get ideas and see what others are doing, and then develop our own way of developing business. But I think to have a presence in Silicon Valley and to have a presence where it happens today, where we have a lot of activities ongoing, a lot of creativity, with ups and downs, because there are always ups communicated, but there are as well many downs. And if we are there, if we are present, and that's the idea, we will be there, we will get firsthand what happens, and then we will be in a position to transfer ideas, transfer concept in Europe, in the business which we have today, and to develop it and to improve it in this direction. That's the idea, basically.
Yeah, and maybe we can address that question also to the other panelists. The question is basically, is Europe dead, right? As a market, can we only look at the US? Uli, where are you investing?
Do we take, I think we were supposed to, is it working?
You are online, you are online.
Very good, no, fine. Europe is not dead, but Europe is different. And I think the Silicon Valley is hard to be copied everywhere in the world, with its ecosystem of innovation, of building businesses, entrepreneurship, and funding. And it's not helpful to try to redo the same thing. Europe is very different. We have different funding structures, different equity cultures, different risk-taking mentality. Japan is different. So we need to look at each country or each area specifically. We do invest in Europe. And we do invest exclusively in Europe because venture capital, no matter whether in the first stages of building a business or in later stages, is a very local play. We want to understand the companies, we want to understand the mentality of the entrepreneurs, we want to be able to spend lots of time. So we do invest in Europe, but structures are so different. It's easier in Europe to get money for the first stages of a company than it is to get money for the growth stages. To put together a expansion funding round of 50 million in Europe is almost impossible unless a business currently is able to attract large international, meaning US-based investors. So that a company needs to take into consideration when developing its business models, when developing its deployment models. And actually there's an important topic to maybe discuss in the next round of questions. Deployment models and which kind of deployment models, customer models are more fundable than others.
So go to Uli first when you have to raise finance, but then maybe you have to ask for US venture capital. Dr. Matsuura, where do you find your source of inspiration in terms of how to promote entrepreneurship within Japan? Do you look at the US? Do you also look at Europe?
Yeah, thank you, Chris. That I explained about the Japanese situation using my slide, and then we explore more utilization of space technology jointly with the other agencies. For example, that just we are talking about the ESA and also the DLR. So JAXA dispatched our members to both agencies to discuss about which field we can make some collaboration with in the field of the not only venture, including the big companies. So that I feel some possibility to have some collaboration at the agencies and target on some field to explore the space, not only space activity, the using the ground segment to make some service to the globally or Africa and Asia-Pacific regions. That's a trial for us.
And Rachel, I mean, I have to ask you the question too, because in your slides, you also you made a lot of reference to the US. Is there hope for Europe? And what is the hope for Europe?
Things are starting to change under the impulse of the Space Agency first, which recognized that they have to leave more room for the private company. But there are structural things in Europe which are different. The governance is very complex in Europe. The access to R&D funds is very complex. So there is an intrinsic complexity of Europe, of space organization in Europe. The companies are multinational, but referring to their national government for research and development funding. So these are specificities that request a unique answer, but the space agencies are starting, and also the larger aerospace organization are moving on their side also.
And Amnon, the downstream El Dorado, where is it?
I think that we have to understand not to mix up. We are talking about large number of investment. We don't need it in the downstream. Each project need, according to our experience, to be successful. We did good analysis, about 1 million. That's a level, good success. If you give less, it's stuck like you eat something, it's stuck, not going down, you cannot kick it out. This is not the right things. To save money, you make a wrong decision in the beginning. So I think we talk about the downstream, the different classes of investment, the different investors. And in Europe is very unique. It's fantastic. Europe is multicultural. We are in a convergent process. You see the EC, you see with Greeks the discussion. The problem with the venture capital in Europe is they are either language-oriented or culture-oriented. A French guy will not be delighted to invest in Germany because he doesn't understand the logic. So I'm exaggerating a bit. But in US, it's different. It's much open. Therefore, it's easier. But I feel today there is a convergence, even in Europe, in the investment. That you are meeting today here, I thank Ricky, Dr. Gruppe, it is a start. We are changing in Europe, we are adapting. From venture, but also our industry start to rethink. And if I listen to Ms. François Ock in the last high-level meeting, He said, wow, ESA doing investment and attracting private money? We should also do these things. So he just confirmed. They start to redirect themselves. Until today, Europe sitting on a fence, moving the leg, look at what the US is doing. And you see, it's Iridium, it was in the past, and today with OneWeb and many others, and Elon Musk. And we try to go there to be participating in those programs. But in Europe, there is not yet. Very institutional, you're right. But we change.
But there's hope.
Absolutely.
There is hope. Very good.
I'm very optimistic.
Okay, so here's another question. And then the second one. Would you please kindly introduce yourself?
Of course.
Yeah.
My name is Bülent Altan, now at TT Tech Computer Systems Program, formerly SpaceX. One type of investment or money source we talked about is the really rich individuals. We list quite a bit of them here, the Elon Musk, the Jeff Bezos, and all of those others. There are definitely many, many rich people out here in Europe as well. How can we attract them to get really active in the space environment and actually enable them as an individual investor and a funding source for these type of programs?
Nice. So how can we excite those wealthy individuals? What do you think? Who would like to go first? Amnon.
I think it's a good question. We asked the same question 5 years ago, 6 years ago. And what we did is we met all those private rich people. So we met one company who had a rental car and they sold it. It's a private family. And we discussed. They say, like everybody knows, they don't trust the bank. So they don't go to the bank to try to find investment. They were looking for something. We were lucky that they were attracted by one. It's a special country with special company who were in this country. So you see, it's a language, it's culture. They felt very comfortable to invest in a company they understand. And like that, we have almost 15 investors. I just gave you a quick. So I feel it's a process. And I feel they need to gain a trust, which is missing. Second, they need to understand what space means. Space is expensive. That's the image of those people. It's not investable because it's only institutional, and they don't see that it's a big business behind. And I think it's a culture, education, and understanding which will allow them to come. And we have demonstrated in a low scale we does it. But this kind of event that I would I'm very grateful for that. It's the stimulation function. So they will come.
Yeah, I mean, Uli, the question is also a good one for you, I think. And because you also need to find investors in your fund, and how do you have private individuals and wealthy families, and how do you get them excited about space?
So it's actually a very good question, and here also Europe is different from the US and from the rest of the world. In Europe, it's an enormous education process to make individuals aware that there is huge commercial opportunities in space that are not as expensive and as long-running as it seems. And in Europe, in principle, there is a lower risk-taking willingness among very wealthy individuals. So there is more convincing work to do in that regard. And I believe there is more education work to do about space in general. If I travel to the US or to Russia, there is much bigger presence of topics relating to space activities in the general public domain than there is at least in Germany. I see that things are progressing and we get more attention, which is helpful, but it's a huge education process. We have raised a venture capital fund with a theme to commercialize space technologies outside of space activities, outside of upstream activities, for the reason that this is less capital intensive. And most of the investors in that fund are either wealthy individuals, family offices, but from the US, from Asia, from Russia, or institutional investors from outside of Europe. We have very few European or even German investors in that fund, with all the difficulty that brings to the table.
Right, so there's still some work to do in order to create awareness and to educate. Rachel, have you been part of this kind of effort to educate? And what's your experience?
on that subject. We had a consultation with very wealthy people and trying to understand what could be their motivation to invest into the space domain. In fact, the number of replies to accept the interview was very low because they do not see at all what they can get from that industry. We had 3 answers saying we are not interested because there is no return on investment we can see matching with our current business, core business. And so what are the synergies or the diversification, but the wealthy, meaning earning money with that diversification, and also the fact that, as you said, too technical, too risky, too long time. But they didn't prevent the fact that they could invest in space hardware company, where there is a client, there is a backlog, there are customers, and the technology is fixed. So where there is recurring business, that does not prevent them to invest in such. But starting a project for zero was very difficult.
Very difficult. Are there wealthy families and private individuals in Japan who are excited about space?
Yeah, and in the Japanese case, most of Japanese investors may be interested in the IT activities, not space. But the current situation is slightly different from us. So the JAXA has almost 300 inquiries from the public. Where is space technology, or which company makes some parts or some component? So there are many inquiries to the JAXA. So JAXA explained that space technology or the handover to the companies which build up such a application or the hardware and so on. So that JAXA's role has not only the R&D activities, but also the have the bridge mission. Yes, educational activities are of course needed.
Which suggests a very important role of the space agencies for educating the general public and the professionals in this space. Do you have also opinion, Pierre, as a corporate investor, do you interact with individuals at all?
No, not in space. In other parts of the group we do, in helicopter business and things like that, but not in space. I think besides the cultural point which have been mentioned, we should think about the image of space in the broad population, basically. When you talk space to the people, if you ask them if they are not involved in this business, they think it's governmental business, it's very long-term, highly capital-intensive and risky, and what for should I invest in such an area as a private person? So
it doesn't sound like a super attractive proposition.
Exactly.
Put it that way.
And I think you have 2 things. You have the cultural aspect. Americans are more dynamic in that regard and risk taken. But you have as well the image of space, which is, on the one hand side, very good, high-tech and all that stuff. But on the other hand side, very conservative and very governmental.
Scientific, but not commercial.
Scientific, absolutely.
Right.
Yeah.
I
Amnon.
would like to give you one important comment which Mr. Feustel-Büchel yesterday said. The European space industry are very keen to have all the money to develop upstream space infrastructure. The money which is devoted for the downstream application using those infrastructure is neglectable. It's a 1%. I was fighting for 1% of ESA budget to do downstream applications, which is really a joke. Why a joke? Any company you know invest in their public relation at least few % of their business to create business. All the space industry in Europe will have much better position if they will see that the public and the politics will understand why this Galileo and Copernicus and those toys that we develop, besides the Rosetta, fantastic for the economy, and they don't invest. They are really opposing to put, and I think Feustel-Büchel said it yesterday in his panel 4 conclusion, we need to educate first our space industry. Sorry, my colleague, but yes, first. They have to understand that by creating the businesses, attracting private funding from private, and they are there, family funding and so on. but nobody trusts because they are the first who should invest. I was very happy to hear that Monsieur Oak is willing to consider to do something, but willing to consider in space everything takes 10 years. If it's take 10 years, we are again losing the market. So I'm sorry, I'm pushy, but we need to educate my own colleague first. Then we can educate the politics, and I think many will help me here. Then we will attract the investors, like Uli and many others.
Yes, and like Uli has to attract her.
Of course, but this is, I think we need to start from the head.
And that makes a lot of sense because that's also the model of the venture capital industry, right? Because, I mean, before they get investment themselves, they have to put some money into their own funds, right? Because it sends a strong signal of credibility, plus it shows that, you know, you put your money where your mouth is, right? And you have something to lose as well, okay? Very interesting. So there's another question here.
Thank you. When we had the opening ceremony, our Prince, Dr. Turki from Saudi Arabia, said one sentence which was exciting me very much. He said, "We have more money than projects." And if I look to the figures that Mrs. Fricke presented, I have the feeling that United States is a super Saudi Arabia. But not only because of the money of rich people, but because of the tremendous amount of money that the pension funds put into new ventures. And I have the feeling that we are in Europe on the other end of the story. We have more projects than money. And I think space agencies, they can do a lot. We learned yesterday that ESA is putting 0.15% into technology transfer. Japan is even putting less on that. US is putting a little bit more. But I think, and industry is maybe even put nothing for the time being into technology transfer. And I think it is really time. We always say space for life, space for people, space for Earth. It's really time to accelerate that business. In the space agencies are a prime generator, or aerospace industry is a prime generator of know-how and patents. They have more than 50% in Germany of the patents applied every year. So they really hold a lot of potential for starting new enterprises. And I just want to appeal to you to do everything to increase that effort from presently, in my opinion, alibi function to a real substantial effort. And industry could do the same. And Mr. Godard, the success rate is not 10%. The success rate in the ESA Business Innovation Centers is 90%. If you do it carefully and if you have people that guide this process, then you can have a 90% success rate and have a real good return on your investment. So I think it's time to wake up and do something more.
So that was a wake-up call. Shall we let the statement as it is? Okay. Okay, but maybe in terms of the success rate, there's an interesting kind of perception, right? In terms of 90%, can we get to a 90% success rate? And would you like to respond to that, Uli?
I'd like to respond actually to the principal theme of there is more need to make people aware, and the more people that work towards creating an awareness of the opportunity, the better. At the same time, I also believe if the money is there but not here, one needs to figure out where exactly the money is and go there. And there is, in particular, on the application side, on the downstream side, there is enough opportunity to think about creating businesses that can go where the money is. The money, fairly simply spoken, is where the revenues are and the customers. So I would like to extend your acronym with another CF. Or the other way around with an FC. So cash flow from customers is actually most important. And that is certainly an investor perspective. And where do we see the simplest deployment models? The easiest way to generate cash flow from customers is through online deployment. So any business model that can be transferred into something that works through an application or off an online platform will be much easier to find investors, both in Europe, and once it reaches a certain scale of revenues, 10, 20 million in revenues, very easily finds US investors as well.
Yeah, and that would be one way to bridge the paradox, right? There's, on the one hand, there's too much money chasing too few deals, and on the other hand, you have many, many projects in Europe, as you say, right? But then it's all a matter about kind of creating the right fit. So not all of these projects may be fundable projects from a financier's point of view, and so we have to think about, as entrepreneurs in the space industry, how to create fundable projects, and I think that's kind of the challenge. Dr. Gruppe, you had a question.
Yeah. Maybe I have 3 or 4 questions. One is, do you think that we have a good chance to attract overseas investors to invest in Europe? When you listen to US investors, they say yes, but I don't see that they do this. The second question is, I have always the impression that the space companies and you entrepreneurs in this field, they have really problems to look for money outside the space budgets. They don't go to other ministries or to other agencies to look for public money. My question is that right? The next is, yesterday we had a very interesting discussion about non-financial assistance. And do you see a role of these agencies acting on the field of non-financial assistance to bridge the way from investors to young companies or growing companies? And the last question, a little bit of provocation, is, are engineers the right people to found a company?
Those are 4 interesting questions you have to prioritize because we are nearing the end of the session. Which one do you think is the most pressing and urgent one for you?
The last one.
The last one. Are engineers the right people to start companies? Are they?
It's the same questions that is often raised. Are entrepreneurs born or educated? I see some very energetic engineers that have all the right mindset to successfully become entrepreneurs and found businesses. I see a lot of people with a finance background that do not have the passion, the energy, the willingness to see a business through challenging phases, that are capable to speak with many, many, many people about their brilliant ideas and still take it further after a lot of mixed feedback. So I don't think it's about engineers. It's about the willingness to undertake something that takes you outside of your scope of comfort, and where the brilliant technical idea needs to be converted into something that appeals to a customer who is willing to put money on the table. And that is the mindset that is necessary. We find this with people with engineering background, with biotechnology people, we find this with finance people and commercial people, sometimes.
So Uli is investing in engineers who have paying customers. Amnon.
I would like to, I think it's a very important question raised by Dr. Gruppe. I will make it very short. I think, yes, there are investors from outside Europe, from Arabian, from America. Currently we are discussing. Yes, they are attracted by Europe. I will go to the last question because the between question we can discuss later. The last question is, there is something culture in Europe. I know many cultures. I grew up in many cultures. In Europe, there is one culture which is problematic. If I'm working in a company and I have a good idea, it's not my idea. It belongs to the owner of the company or belongs to the company, which means they are not encouraging in Europe in generally to create with this person with the idea to create a company, to give him money to start up. I know it in other culture. If there is an idea in a company, they are encouraging you to set up a startup. They're giving you money. They're having 50% or whatever, but they would like you to grow because they have the shares. Here, whatever happened here, it belongs to me as owner or corporate. It's a culture in Europe, which I think it's pity, but it's changing with the new generation. With my students that I'm teaching, it's changing. They start to do it, and I think it's a process. We are in the right direction. Dr. Gruppe, I think we are in the right move.
Pierre, do you sponsor startup entrepreneurship from within Airbus?
Yeah, we do have some sponsoring and support. That's how we do help things. Even though if there is no business case, and we do that, but that's a marginal percentage, to be honest. I would like to come back to the question of Dr. Gruppe on the fact that industry is not enough tackling other budgets. So it's clear that the space industries is first looking at space budgets in the governments, which has a logic in it. It is mostly true this point, I would say, on the traditional space, launchers, satellites, where we focus rather on this area. It is less true, in my view, in the service area, where we have a lot of service activities where we go directly to the final customers, basically, and we try to capture customers and budgets which are outside, and which is, by the way, one of the difficulties which we had in the Astrium world to develop a service business in a space environment. It was really difficult because it's not the same mentality at all. You need different people, and we learned that in Astrium. We had really difficult times because they came with a lot of ideas on we can do this in Africa, we can do this there, and then you had the whole group saying, hey, hold on a second, yeah? Where is the governmental customer, to come back to your point? That was the difficulty, but we pushed hardly, very hard in the Astrium world on the service part to develop that, I think.
Uli, you wanted to respond also, either to one of the panelists or to one of the questions?
Yeah, to the first question, actually, one quick thought about US investors finding non-German or non-European investors. Actually, what we see is when people come to Europe, money follows success. So it's difficult for early stage companies to raise non-European money. For growth companies, it's not so difficult in areas where successes have been shown. That's why now so many Silicon Valley investors, they actually come to Berlin and invest huge amounts of money in internet-based companies. I'm saying this with a view towards if we manage to create a few growth funding success stories in the community of space-related investment activities, then there is much more reason to think that larger US or international investors will come and follow that success story. So to put it less nicely, there is a certain herd effect in where money is being invested.
Okay, very good. So we are nearing the end of the panel, so that's why I would like to kind of pose one last question to our panelists. What would be your recommendation to the space agencies regarding, how to facilitate the process of creating entrepreneurial activity, and specifically the financing? What would be your recommendation to the agencies? And then secondly, what would be your recommendation to those here in the room who actually, who have a project and who would like to get started? And what would you tell them? So your recommendations, please. Shall we go from left to right? Dr. Matsura?
Recommendation?
You have a recommendation, yes?
So as a space agency, we will invite all participants, especially from the non-space sectors, to join our activities. So, and then I feel some difficulty to evaluate the business firms' activities. So space agency knows the space technology and the space application very well, but we don't understand the business plan and so on. So that we need space agency have some collaboration with not investor, but some kind of other agencies, so to evaluate the business firm or business model. So yes, that's my recommendation. We need more collaboration to other agency and investor and so on.
Great, thank you. Rachel.
One will be for the space agency to continue to think about how they can change in their organization, way of doing business with this. This is an ongoing process, so continue on that way. Also, more publicity about the success story. We mentioned the success story. Yesterday somebody mentioned the SpaceX success story, the Skybox success story. So any time we have such things to communicate, that's good. And for the promoter of new project, do not hesitate to go to the space agency, because there is a place where there is a lot of accumulated technical knowledge, and that could be somewhere of assistance in their project.
Thank you. Amnon.
I have 3 recommendations. One is, if you look at the member state investment in space, it's very unproportional. They don't invest enough in the downstream applications. First is, please put a well balance between up and downstream. Understanding, and this is maybe not to forget, by having the community aware of the use of space, you will have much more easy to support many more infrastructure, space infrastructure. So it's actually a self-helping process. I think they are not so far yet. They are in the process. UK, they are putting 3.5% of the budget into downstream applications. All other are below 1%. Second recommendation, space applications, use of space, you cannot put geofencing. You cannot work it in a national territory. This is impossible. To have space businesses using space, you need a larger user community to create the sustainability. Large user community is beyond any borders. So think globally, open up. Therefore, European Space Agency is successful with the Integrated Application Program. That's the only reason. Because we have no geofencing. We have not only 22 member states, we have the whole globe as a part of the community who use water. I just came from Africa. So think globally. The third recommendation is educate the space industry that you are funding, they are hanging on your money wallet, so that they will be aware that they should promote the community understanding that the space is essential for the next centuries. And this is a very important element. So that's my 3 recommendations.
Great, thank you. 3 recommendations, very clear. Uli.
So if we want more businesses that get funded from this space, we need more investors like venture capital firms that have money to invest in that space. We feel actually as Triangle a bit lonely. We're the only venture capital firm in Europe that has a committed fund, and it's not even a big fund, because it's also very challenging to attract institutional investors. And while I'm not a fan of asking for government money, and I'm not doing it today, I still think the agencies can play a big role in helping, for example, their large customers, the space corporates, to understand how important it is to commit not much, but small amounts of money for the corporate perspective to venture capital firms that then invest as part of their regular investment activities in that segment. One recommendation towards the agencies. For the entrepreneurs, I've said it before, the #1 recommendation for every entrepreneur, no matter which business, is understand where your customers are, for what they pay you the money, and how to best reach those customers. Then you will find investors.
That's right. I always tell my students or the people I mentor, you have to figure out who to send the bill to, right? Pierre, your closing statement.
So very shortly, in my view, 2 recommendations. The first one would be, in my view, a collective one, which would be to change a little bit the image, to work on the image of space, moving it from a slow moving item, highly capital intensive, what we have discussed, to something more dynamic and where each and everybody can profit. And we use space. I mean, we have navigation system, we have phones and so on and so forth. So we need to communicate on that one, that it is a broader market than the institutional market. It is not done for the time being. So that would be the first part. And I think we have a huge effort for all of us, industry, politics, agencies, which are space to communicate in that direction. The second recommendation would be, as the industry has understood or start to understand, we need to move, we need to evolve, we need to be more agile and develop ourselves in that direction. I think the same exercise should be done in the agencies, parallel to industry, and we should exchange on the. We have huge difficulties in industry. You cannot imagine all the problems which we have when we want to change things in big corporations. I'm sure the agency will have the same problem, and we should exchange on that openly and say, okay, that's the difficulty we have, but at least that we move both sides in the same direction in order to open minds and a little bit bring fresh wind into this business.
Great. Well, thank you very much. Let me tell you from my point of view what I have learned. First of all, I'm a total outsider, so I learned a lot on this panel. I learned that there are lots of opportunities, really, really many of them, and this is very exciting. There is certainly hope for the space industry in general, and I think also for space industry in Europe, because it's a global game. It's not a local game. And what I have also picked up is that this industry is in a process of change. Mindsets are beginning to change, own mindsets, as well as kind of public awareness. We're just at the beginning, but it looks like it's going to be, and it can be, a very exciting journey. I hope that this kind of panel has given you some insight, and it also kind of has given you some perhaps inspiration of how you can be part of this journey, how you can be a change agent and contribute to this change. Let us thank our distinguished panelists very much for their kind of great insight and sharing so openly with us their stories, their lessons learned. Thank you very much to the panelists.